Welcome to The Explainer. Today we're going to tackle something that, let's be honest, can feel like a total maze for a lot of business owners. I'm talking about monthly GST return filing. But stick with me and we'll turn all that confusion into total clarity.
So you hear terms like GSTR-1, 2B, 3B, and your head starts spinning, right? Look, you are not alone. It sounds like a bunch of jargon, but trust me, we're about to make this super simple.
All right, so what even is a GST return? The easiest way to think about it is like this. It's basically a monthly report card you send to the government. It shows them everything you sold, everything you bought, and from that, they figure out exactly what tax you owe. Simple as that.
Now, you might have heard there are like 13 or more different forms in the GST system, which sounds terrifying. But here's the good news. For most regular businesses, the whole monthly cycle really just boils down to 3 key actions. Just 3. Let's walk through them. Okay, step 1. This is all about your sales. The very first thing you've got to do each month is tell the government about everything your business sold. And the way you do that is with a form called GSTR-1.
Think of GSTR-1 as you telling your side of the story. You're basically listing out every single invoice, every single sale you made. And this is so important because what you report here is what allows your customers to claim their tax credits. So you got to get it right.
All right, let's talk deadlines because this is where things get serious. If you're a monthly filer, and that's typically businesses with a turnover over 5 crores, you have to get your GSTR-1 filed by the 11th of the next month. Seriously, circle this date. It's the first and most important deadline of the month.
Okay, so you've reported your sales. Now for step 2, which is all about your purchases. And this is kind of cool. When your suppliers file their GSTR-1, all the stuff you bought from them just pops up in your account. This is where you check and confirm the GST you've already paid so you can claim it back. We call that the input tax credit, or ITC. Now, in your account, you'll see 2 things, GSTR-2A and GSTR-2B, and you really need to know the difference. Think of GSTR-2A as a live, constantly changing shopping list. As suppliers file, things appear on it, but GSTR-2B, that's the final locked-in receipt for the month. It's static. This is the one that matters. You can only claim credit for what's on your GSTR-2B. If your supplier is late, too bad. You'll have to wait till next month to claim that credit.
And that brings us to the grand finale. Step 3, filing your GSTR-3B. This is the summary return. It's where you put it all together, what you sold, what you can claim back, and then you pay the final tax bill.
The math here is actually pretty simple. You take the total GST you collected from your customers. That's your output tax. Then you subtract the GST you paid to your suppliers, the input tax credit you confirmed in GSTR-2B. And whatever is left over, yep, that's what you pay to the government. Easy, right? Okay, here is the second date you absolutely cannot forget. The 20th of the month. The 20th. This is your final deadline to file that GSTR-3B and pay what you owe. Miss this one, and it's going to start costing you real money. So, what actually happens if you're late? You might think it's just a small penalty, no big deal, but you'd be wrong. The costs of being late can be, well, pretty painful for your business. First up, interest. The government charges you a whopping 18% per year on whatever tax you haven't paid, and that starts ticking from the very next day after the due date. 18%! That is not a small number. But wait, there's more. On top of the interest, there's a straight-up late fee. It's 100 rupees a day. But here's the kicker. It's charged per act. That means 100 for CGST and 100 for SGST. So it's really 200 rupees a day. That adds up fast.
Now, there is a cap on that late fee, thankfully. But it's 5,000 rupees, and that's per return. Imagine being late on a few returns. You can see how this becomes a massive, completely avoidable drain on your cash.
And it gets worse, because the financial penalties aren't even the whole story. When you miss a filing, you get blocked from filing the next one. It creates this horrible domino effect, where you just keep falling further and further behind. And maybe worst of all, it hurts your reputation. Your customers are waiting for you to file so they can claim their credit. If you're late, they can't, and that directly damages your relationship. So let's just recap that simple journey. 1. Report your sales in GSTR-1 by the 11th. 2. Check your credits in the final GSTR-2B. And 3. File the GSTR-3B summary and pay up by the 20th. That's it, 11th and 20th. Nailing this simple cycle isn't just about following rules, it's about building a solid, trustworthy business. So here's what it all comes down to.
Getting this three-step dance right isn't just about avoiding a fine. It's about keeping your business healthy, your cash flow strong, and your customers happy. So, you got to ask yourself, are you setting up your business to win at this, or are you just leaving it to chance and waiting for the penalties to roll in? Because that choice, as we've just seen, will hit your bottom line one way or another.